topic. So, currently sessions on project management, which we came to. Today we're focusing on bookkeeping and financial management. So this topic is an interesting topic, and it's one that we partnered with Pelican Accounting to deliver. So Pelican Accounting has been very patient and kind with me. They do our annual audit, and they've been so patient and answering all my questions. And I thought they'd be a very good presenter for today's workshop. So just before I introduce them and hand over to them completely, just some housekeeping for the people in the room. So the restrooms are at the end of the corridor to the left. If you have an emergency, just in case, unlike your an emergency, the emergency exit is the door that you came through. So you got, oh, well, there you go. But we also have an exit at the back. So if there is an emergency, the east suggestion, then you close the back at the front entrance. We're going to serve refreshments at the end. We have water available, so feel free to help yourself. And I think that's roughly it. So I'm going to introduce our speakers for today. So we have two great speakers from Pelican Accounting. So first of all, we have Ms. Shirley Maticott joining us online. Shirley Maticott is a chartered certified accountant and certified internal auditor with over 35 years of experience in accounting, auditing, taxation, financial reporting, and internal controls. She's the principal of Pelican Accounting, Inc., providing services for leading corporations, financial institutions, and SMEs across the Caribbean. Her career includes senior roles with the government of Dominica, the Port of the Movement, Dominica Water and Sewage Company, Caribbean Credit Card Company, and Equity Hospital Company, where she specialized in financial management, risk analysis, AML, compliance, and inventory systems. She has led major external audit, internal audit assessments mandated by the ECCB, and control reviews of regional enterprises. Shirley is a member of the National Association of Tax Professionals in New York, a former officer of the Institute of Chartered Accountants of Eastern Caribbean, the credit union movement as president and treasurer, and actively served on the boards, including the chair of the advisory board of the Antioch Baptist Church. So we have a very experienced accountant with us today. In the room with us here, we have Ms. Eileen Harris. She's an experienced accountant professional with over 10 years experience in the field. She earned her BSc in accounting from the University of the West Indies, Hill campus, and is currently pursuing her ACCA designation. She is passionate for accounting. Her passion for accounting began at a young age while working as a cashier in her father's business, sparking a lifelong interest in finance and business operations. Over the course of her career, she has held supervisory roles in several businesses, building strong expertise in financial management and team leadership. She currently serves as an accountant and is also responsible for the management of Pelican Accounting's profit, where she ensures smooth operations while delivering accurate and reliable financial services. When she's not managing numbers and financial strategy, you can often find her exploring food fairs or taking trips to enjoy new students. So I'm going to hand over to guest speakers and to take it from here.
Okay, good afternoon, everybody. So I wanted to start with a quick icebreaker. So I'll give you a minute to think about what you're going to say. So the icebreaker is I want you to tell me what your profession is without saying it directly. Right? So for example, mine is everyday stress. My clients make a mess, but I love the numbers no less. Wow. So if you want to write a comment, if you want to make a point, however you want to say, tell me what your job is without saying it directly. So those of you in the chat, you can place it in the chat and we'll be a couple of things. So I'll give you 1 minute to think, get it just slow it, and then you just share with us. Check the time.
That feel free to anywhere.
Okay, so someone said looking and writing things to help the people learn. It's all the teacher. Okay, so you were ready to share? You look like you're still thinking. Yeah. Somebody ready? Okay, let's start with you.
Other one you have to think of, which is lots of people.
Lots of paperwork. Okay, data analyst, IT, secretary, bookkeeping.
Finally, secretary, or not the secretary, like.
Administrative.
Yeah, administrative rules.
Okay, next.
Mine pretty easy though. Your heart, that makes your feet move.
Somebody else in the chat, he said, when your heart makes you feel cool. He said, videos with atheists.
Okay. Are you doing everything online in one flash?
Ooh.
Pictures.
But that's a long, yeah.
She makes everything online everyone. Alright. Pictures. Not quite into the thinking.
I often go out at sea, exploring the coral reefs,
Of stuff, diving, snorkeling.
captain. So I would say, no.
Marine biologist.
Also, we came in after study task was to tell us what your profession is without saying it directly. Okay, I'll come back.
Yeah, you're right.
Okay, so if you have your plastic bottles, I take them from you.
Okay, okay, so thank you for friends along. So now we'll get into it. So our topic today is dealing with bookkeeping and financial management. Okay, so we're gonna look at some of the best practices for recording your income and your expenditure. And one of the major problems that we have as accountants is small businesses keep mixing the personal transactions with the business transactions. So that takes us a lot more time to sift through your information and say, only if this casting was for this staff, why was a personal transaction? So what we want from you is to keep this separate. Other person says, so you know, I don't take any salary from the business, so this is exactly. So what we want from you is to give yourself a salary. If you say, okay, I'll keep it short, I'll make it $500 or $1,000 a month. Use that salary to make your purchases and keep the business transactions and your personal transactions completely separate so that it prevents the audit issues when we come and we look into your stuff and we have to be like, okay, so this is that, and we have a lot more stuff to deal with, and that gives us a lot more time to go through. It helps you to also track the true performance of your business, because if you're looking at it at face value and you have all these personal transactions fixed in there, you don't really know how your business is doing, you don't know what you're actually spending on your business or what the business is actually costing you. What you will see is some of what the business is costing you and then what you're costing yourself as well. So we also needed to maintain accurate records and record transactions sooner rather than later. A lot of clients, we tend to ask for the information to come very quickly. So maybe once every week, if you do with your bookkeeping, you bring your documents every week first and we go through it. A lot of clients like to say, I don't know where I put the receipt, I don't know how to do this, I think I try it where I should put in my pocket and then get washed with all these things. As soon as you go and you buy the thing and you get the receipt, snap a picture. Save it. Because the receipt fade very quickly, you know. Yes. In a week, 2 weeks, you don't really remember what you bought, and then we can tell you what you bought either. So please keep your receipt, take a picture, scan it, whatever it is to save it so that we can record the transactions in real time and sooner rather than later. And that also helps you to have a truer picture of what the business looks like right now, rather than, maybe this was the true picture of the last 2 months, but it's not your true picture right now. So the quicker that you deal with these things and you get it to your accountant, the easier it is for you. Once again, keep your receipts, the invoices. So many people, as soon as you done it, say, well, the money doesn't spend, so you tell you the receipt. Keep your receipts, keep all the supporting documents. Inland revenue actually requires that you keep documents for several years. Most person like this, whatever inland revenue say, like, if I come 2 years from now, I need to see the documents that you had from 2023. So if the inland revenue act, you have to be able to have this to present to them. My favorite part, hire a professional accountant and bookkeeper. Our job is to make it a little easier for you and to deal with all the headache, as just the job is a headache. And if you're dealing with it, it's not going to be as easy as we take all the stress out, that's what we hear from. So we ensure compliance with all the tax laws and regulations. And then it has quite a bit of taxes that you have to keep up with, the time frame, the different calculations, which I'll go into in a moment. So it could baffle you a bit trying to keep up with all the different deadlines and things that you have to meet. So for instance, that everybody should know that we had that for quite some time now. If you are a business that's registered for VAT, you know that you have to file for VAT the 15th of every single month. Every month you have to file for VAT. Now that you have to go into what goes into your output VAT section, what goes into your input VAT section. Input VAT is everything that expense that has VAT on it. The output VAT is all the sales that you collect with VAT on it. Then you have to net that off and subtract and see if you owe inland revenue or inland revenue owes you. Of course, inland revenue is not going to pay you back. They're just going to put it forward as a credit. So don't think it's going to have to do with it. So those are calculations that you have to do every month, and this information is taken from all your receipts and invoices and documents that you've got to. So we made that a little easier for you. Social Security, the same thing. We have to keep up with all different changes. The levy threshold was actually increased the first of last month. So all of these changes, we keep track of that for you. And we put together where you have 2 employees, 10, 50, or just you. We can take care of the requirement for the Social Security and ensure that you're in full compliance with all of the laws, making sure that you're reporting for all of your employees, because every employee that you have is supposed to be registered for Social Security. Legally, everyone is supposed to be registered for Social Security. So don't try to evade that part. They have to be registered. Moving on to CIT, that's corporate income tax. So this is for all the persons that are incorporated. So if you don't know incorporate, when you incorporate your business, you're basically in layman's terms putting that separation between you and your business legally. So your business is its own separate entity, and you are not personally liable for anything that will happen with the business. So those persons have to file corporate income tax. You'll get a little more detail of that when you get into the other side, business matter, but they have to file corporate income tax 3 months and 15 days after the end of their financial tax year. So once again, it's a little tricky to remember all of these dates and all of these things. You hire us and we keep track of you and we say, okay, you know, your year end is this time, so time to start giving us the information and we put together your financials for you. You can see on the flip side is for persons who are not incorporated. So it's unincorporated business tax. And for this one, your payment is once every quarter. For UBT, you sometimes end up paying a bit more than if you were incorporated because UBT doesn't allow you to subtract your expenses. So for UBT, you pay a specific percentage on all of your income. All of the income, so you don't get to say, well, I spent $5 on this drink yesterday, so I need to take out my $5. In my revenue say, give me on everything. So we also are able to provide you with expert advice for financial decision making. So in terms of once you get all your information again on the individual bookkeeping, we're able to tell you if whatever goals you have, if it's a good financial decision. So if you say you want to buy a new camera, we'll sit down and look at your finances for you and tell you if it looks like you're having enough to be able to make this investment, or if there are changes that need to be made before you can take that step. And we free up time. So you get to focus on the other things and focus on growing your business. And you're fixing people ACA one, we update like, if I enter this document just for this one, make sure you follow this. You focus on fixing the AC and we focus on dealing with the accounting. And on that note, Collection Accounting also is offering a small business package at the moment, which will be tailored specifically to your business. So if you're interested in knowing more about that, you can speak to me after, or you send us an email. You have some business cards on your notepad. You send us an email at, for those of you in the chat, sorry, you're going to see that information later, but email at info@collegeonabs.com, or you can send us WhatsApp or call us, but you'll get the phone numbers later. If you're interested in that, you can speak to us because we'll tailor it specifically to you, because we don't want to overcharge you when your business is less, and we don't want to undercharge you either. So we'll tailor it specifically to your needs, and you'll be good to go. So in dealing with the bookkeeping, one of the best practices is to use accounting software. We're in 2025. Time to upgrade. I don't know if any of you did accounting in school, but when you learn to do balance sheets and reconciliations and payroll, it takes some time. We ain't got time for that now. So the accounting software saves us a lot of time and it reduces the human error aspect of it. Of course, there's still going to be human error because humans are the ones inputting it, but it's significant and it reduces it because a lot of the software gives you a prompt if you're entering something that you think is incorrect or maybe you should rethink this transaction. So they give you certain prompts that helps with that. It also helps to automate recurring entries and invoicing and reporting. So for instance, if you are accustomed to go to Paul and buy a package $50 every Monday, instead of going every Monday and typing in that transaction, you put up a recurring transaction and every Monday you automate that transaction and enter it for you. So you don't have to worry about that. So some free and low cost accounting software. On the free side, we have Wave Accounting. I will be able to tell you about Wave. We have QuickBooks, we have Accounting, and these are just some cloud-based, simple interface ones that kind of help you as a small business and are easy for you to understand and learn. And then the low cost options, we have FreshBooks, Zero. Oh, sorry, I forgot to say, I need you guys to pay great attention to everything you see and everything you hear, because at the end we have a little couple quiz, so we don't see if you retained anything. So we don't know. Okay, so we have FreshBooks, Zero, and my personal favorite is QuickBooks Online. QuickBooks Online has a lot of different packages tailored to the size of your company. So whether you have a smaller company or you have a larger company, there are packages that it offers for you to be able to deal with it. Collection Accounting also, as one of our services, we offer QuickBooks Online training. So if that's something that you're also interested in, you can contact us and we'll be able to come up with a package as well to help you learn the software a lot better. We also offer another service which is helping to set up the QuickBooks Online. So we sit down with you and we do all the startups, we do all the beginning entries and accounts and everything that's necessary to start your QuickBooks Online journey, and you will be good to go. Posting and preparing financial statements. So anybody ever seen a financial statement before? You're seeing some, you know exactly what they look like? Yes, no? You're seeing it? No? So I've printed two. Sorry for the persons in the chat. So you can just pass them around and look at the different segments that are a part of the financial statements when we're dealing with financial reports. So financial reporting basically summarizes the financial health and performance of your business. So in layman's terms, your business doing good? Are you doing so good? Are you doing just okay? The components of the financial statements, you have your income statement or your profit and loss statement, or sometimes you would also see income and expenditure statements. Basically, this This statement shows you your profits or your losses. So it gives you all of your income and then it lists all of your expenses. It takes your expenses from your income and the resulting figure is your profits or your loss. If you spent more than what came in, you made a loss. If you spent less than what came in, then you would have made a profit. Onto the statements of financial position or your balance sheet. Exactly what it says, it shows you your balances. So you have your current assets. Your current assets are things like the people that owe you, who are your accounts receivables. You have your cash, and if you're an inventory focused company, inventory will also be in your current assets. Then you have your fixed assets. Your fixed assets are the things like your furniture, your computers, the things that you use in your business that are fixed. Those are your fixed assets. Moving on to your current liabilities. Current liabilities are people you owe, so your accounts payable. If you have a credit card, what your balance on the credit card is, that's in your current liabilities. If you apply for that, the VAT payable goes there as well. Your long-term liabilities, your loans to fall into current liabilities or long-term liabilities depending on the duration of the loan. And then the final segment of your balance sheet is your equity section, which shows you the money that's put into the business, your equity or your capital. Always remember, assets have to equal your liabilities plus your equity or your capital. So always remember in your balance sheet, for your balance sheet to balance, your assets have to equal your capital and your liabilities. Moving on to the cash flow statement. The cash flow statement shows the movements of your cash flow the period. So the inflows, the outflows, everything that you spent, everything that came in, it shows with that movement. And like the rest of the financial statements, most of the statements will be shown comparatively. So you would see, as you're looking at the ones that are here as well, you will see there's a prior year and then there's the year that you're dealing with. So you can look and see if you did better or worse or just along the same lines as what you did previously. Lastly, we have the statements of retained earnings. This basically is just telling you how much of your profits is put back into the company, how much you're actually keeping in the company. Some companies, if they give out shares, then from their profits, they will take out dividends, and then what's left from that is what will go to their retained earnings. Other persons, if you don't have those things, your total profits may be put back into your business as retained earnings. The notes to the financial statements help to give a lot more insight as to what you're actually seeing in the financial statements of here. So for instance, you have your cash balances and your bank balances. If you have 5 bank accounts, we're not going to show the 5 bank accounts in your balance sheet. We're going to have one line and say cash and bank, and then when we get to the notes now, then you'll see the separation and we say, okay, these are the 5 accounts and these are the balances in the accounts. This is all that we had, etc. So the notes gives you a lot more insight as to what's happening in financial statements and help you to understand a lot more what you're reading and what you're seeing. Okay, so my favorite part, right? A lot of persons have a little misconception because they look at the financial statements and they say, this looks nice and put together, they look simple, and it's like, this is what they're charging me so much money for? I could do this. But trust me, the work behind the scenes is enough work. Just like when you go to the supermarket and you pick up a tomato and you look at it and say, okay, this is nice. But you ain't thinking about all the work that the plants had to do behind tilling the soil and the fertilizer and any pesticide and digging up every day and making sure the sun hitting it just the right way and enough water. So think of us as the gardeners behind the scenes for what we prepare for you. So in terms of the proper bookkeeping and reconciliations, so we go back again to when we spoke about keeping your receipts, having all of your proper documentation so that you bring it to your accountant and we have this information to use. In terms of reconciliations, reconciling means basically to match what you have with the outside. So bank reconciliations, persons bring the bank statements and they want us to enter what's on the bank statement in the accounting software. That is not proper practice. What we're supposed to do is go into our accounting software where the information should have already been entered to all your receipts, your invoices, your deposit slips, your checkbooks, all of that source documentation, all of that should already be in the accounting software. So when we get the bank statement now, we look at it and we tick off and we say, okay, the bank statement has this, yes, we have this. The bank statement had that, yes, we have this. This helps to save you time and money because we've had clients who made deposits and had no idea that the bank didn't record the deposit. But when we were going to the reconciliation, we noticed that there's a deposit that we recorded in our accounts and they did not have, the bank did not have it recorded. But because they would have given us all of their documentation, we were able to pick that up and they were able to go to the bank and get that rectified. Thousands of dollars would have gone down the drain if the bank reconciliation was not done, because they would not have noticed that those transactions were missing. So that's why it's very important to reconcile your accounts. So that's why you have to make sure that all the source documentation is in so that we can match it back to what's there. And especially in this age where fraud is very, very prevalent, check your accounts daily, use the online platforms to ensure that your account is looking the way it's supposed to, so you can pick up things very quickly rather than when it's too late. In terms of reviewing your transactions, when you bring the documentation to us, we also don't just put it in the system. We have to go through and ensure that what is there is accurate and complete. For instance, if you come to us to do your financial statements, we know, okay, let's say you pay your electricity bill. We know that electricity bill, Skellig ain't going to say, oh, I'm taking a month off and we're going to pay your penalty. Skellig is going to give you 12 bills per year. So if you only give us 5, we're going to ask you, where's the rest? Because we know Skellig ain't going to say, take a break. So we're going to ask you for all that documentation, and then we're going to go through your transactions to ensure that everything that we're putting in is accurate. So for instance, we've also had clients who would have paid invoices and then send the invoices up to us. And in our process of checking over the invoices and entering them into the system, we would have noticed that VAT was charged twice, it was a duplicate, and the total of the invoice wasn't showing properly how it should have, and things like that. So they would have overpaid, and we would have brought that to their attention, and they were able to go back to the vendor and get that rectified. So behind the scenes, we do a lot of work to make sure that you are not getting scammed. Yes. When all of that is done now, we do adjusting entries. So adjusting entries means that we go through and we look to see if there's anything that we need to add, anything that needs changing, we need to take it away, and we will tell you what the entries need to be. Some of those entries would include depreciation. Now, once again, we spoke about your fixed assets. From the moment that you have an asset and it's in use, it begins depreciating. So you have to record that it loses the value, so you have to record that every year. Your accruals would also make entries for that. In terms of accrual accounting, you have to record your expenses at the moment they are incurred, not when you pay it. So if Skellig sends the bill today and you're not paying it until the next 3 months, you record that bill today. It doesn't matter that you're not paying it until 3 months down the line, you record that bill today so that you can know that your financial position is at Skellig X, so is the amount of money. Once all of that is done now, then we start to put the financials together. So all of this has been sitting in your trial balance, and then we start to pick out the amounts. Everything for your profit goes into your income statement. Everything to do with your balances and your assets and what's not goes into your balance sheet. We do the transactions for your cash flow statement. We put together your retained earnings statement. We put together all the notes, and then that is when we have that one final document. And we have now to send it to another accountant for our peer review, because we are the professionals, yes, but still room for human error. So you need a double check and another professional eye to ensure that everything is accurate. And that is when you pass it on to the client for them to look at it and give their feedback on what's not. This is especially important when it comes to the audit side of it, which is what we're going to speak about now. And my boss will enlighten you some more on that part, and then I'll see you after she is done.
Okay, everybody can hear me? Can I have a response?
You're a little soft.
Response? Everybody can hear me? Am I online? I'm not getting a response.
Let's see. You're very soft in the room. I think it's now gone through here for some reason.
Is it my volume? No, I don't think so.
I think it's the speaker.
I think it's the speaker. For some reason, the speaker has decided to back up.
Yeah, we tested earlier on and it was okay.
Okay.
All right. I think the online people have responded that they can hear me. At least one person has online. I'm not sure for those inside. Shamila. Shamila, thank you for your response. Can I go ahead?
Yes.
Okay. So my name is Sherilia Massicott. For those in St. Kitts some persons in St. Kitts call me Sister Pierre as a result of introduction. Abby might call me Sister Pierre. From Antioch Baptist Church. That's how they call me. But it's okay. I know it's me. I'm not bothered about how I'm called. Some persons call me Massicott, Cheryl. It really doesn't matter. All right, so that's me in a nutshell. I think Abby gave my introductions earlier. So that's way of introduction. My contribution is on audit. I don't think we mentioned questions. I don't mind taking questions in between. I'm not sure how it is set up. But if you have a question and you have the chat, you can leave the question in the chat. And Abby and Kylie would let me know, and then we could answer the questions as we are going along. I like questions because I deliver those lectures a lot. Well, not as much as when I was younger. And sometimes persons have a question, they don't give it, and then they forget, and then they go away, not having their questions answered. So if you have a question, you could leave the question in the chat, and we could seek to answer it even before the presentation is over. Okay, with that said, let me go into the meat of the whole thing. So when you hear of audit, sometimes the bank tell you I need an audit, or FSRC says we need an audit, or the law says you need to have an audit, like the NGOs, like Abby, they have to have an audit done. NGOs and non-profits, the law mandates they have an audit done. You have corporations, public corporations must have an audit done. Any company which reports to the public, like public companies like SL Hosford's, TDC, Credit Caribbean Credit Card, the banks, and they have a public fiduciary. That means they have a public responsibility. They must have audit statements for their shareholders. There are private companies where the banks can mandate an audit, an annual audit, which gives them assurance that the information presented in the financial statements is accurate. So there are ordinary companies where an audit is may not be mandated legally, but their shareholder, the main shareholder, and the banks and other institutions that they do business with may have a greater understanding and assurance on the information presented in their financial statements. So that makes the case for an audit. But there are two types of the internal audit is usually for your internal purposes. The internal audit is done usually by the staff within the company. Let's say like TDC, as an example, they have an internal audit department. And so they do the audit of the respective departments on a periodic basis and report back to the shareholders of TDC onto the board to give the board the assurance. That's internal audit. So internal audit looks at things like controls. Internal audit looks at their relationships external to the organization, like contracts. They look at accuracy. Their main goal is in internal audit is to safeguard the funds of the assets of the organization. That's the main thing, to safeguard the assets. And you do that through observation. You do that through cash counts, periodic surprise cash counts. If you have inventory, periodic surprise inventories, ensuring that the contracts that the company has entered into, these contracts protect the company. The terms and conditions of this contract is favorable to the company. Go through all the contracts, new and existing. The internal audit also makes sure at the end of the year or during the year, the assets that they say that's on the books are actually in existence and they are actually working. Let us say a company say they have a tractor. The books have a tractor as a fixed asset, but the tractor is in a garage somewhere on the repairs and may never, ever work again. But the tractor is on their books and it was working at some point in time. Internal audit has to look at that tractor and make a determination that this tractor will never work again, and so it needs to be removed. So that's mainly the work of the internal audit in a nutshell, on control and risk. Look at the company's risk in terms of oversight and report back to the board. Internal audit reports to the board. And then we have the external auditing, which is what we are really into this afternoon, external audits. And reviews. Sometimes you may not need a full audit, neither do you need a compile. So there are three types of financial statements that we normally present to the public. You have just compile financial statement, put it together. Or receipt, like Kylie spoke about, you just put everything together as accurate as you possibly can. That's compilation. And then we have what we call a review. A review is already compiled. You give me compiled statements or you give me a trial balance. And from that trial balance, that balances, we financial statements, and then you look for accuracy, the mathematical accuracy. You do analytics to ensure that the information you presented is correct. You do comparatives on year. You do peer comparatives. You run your calculator through everything. You ensure your assets are accurate. That is more or less a review of the enterprise. But the review does not take into consideration controls and all those things. That's just a review. Now we come to the audit, which is a lot more involved. Persons come and they says, I would like an audit. But sometimes when you start speaking to them, what they really want is a review or a compilation, because auditing is expensive. It is expensive because it is a lot of work, and more the international community is imposing rules and regulations to govern audit, which impacts us in the Caribbean, although we do not have all the sophisticated systems that the world has. But we have to abide by them. It is called what we call the IFRS, International Financial Reporting Standards. And we have to abide by them for auditing, and we also have to abide by international accounting standards, auditing standards, IAS, which is International Auditing Standards, and the IFRS, which is International Financial Reporting Standards. These two sets of standards is what governs external audit. So people just think, oh, just put it in. No, we have to abide by those standards. If this financial statements does not reflect the IFRS's, the financial reporting standards, because I have a license, and my license allows me to sign financial statements as an auditor. I will not sign that financial statement if I does not assure myself that it meets those standards. And these standards are high. Every year they change. Every year they change. So people like me have to be constantly studying. We have to do 40 to 50 hours every year. We are constantly studying because the standards are constantly changing. So that's the 3 audit types. What do you require for an audit? How to prepare for an audit? Because if you say, because there are sometimes you may say, I'm a small business, but your bank might seek an audit. And if the bank seek an audit, what should you do? You have to prepare for that audit. So Kylie mentioned the documentation. You have to collect all your accounting records. All. You have to collect all your accounting records. What are your accounting records? All your bank statements, receipts, financial statements, invoices, social security records, your VAT records, tax records. Nobody asks for your last financial statement because that's would from the opening balance for this final. Let us say we are doing the audit for 2022. And the year do not always follow a calendar year. So it could be from the 1st of October 2021 to September 2022. And as a result, so it doesn't follow the normal calendar year. And what do you need? First thing we ask you for is a trial balance. And then we ask you for the financial statements for the past 2 to 3 years. Why 2 to 3 years? It's because it gives you an understanding of the current year. So usually there will be, if you're in the same industry, your industry has not changed, there are no major world events that's going to impact your operations, the industry you are in is constant, then there ought to be a certain level of consistency in your financials. So it helps us to give that assurance. That's why we ask for 2 or 3 years of your past financial statements and your trial balance. Then we inspect those records. We review them to make sure that they are accurate. Your profit and loss statement, your balance sheets, your tax return not just for all your taxes, your value added tax. If you are qualified for VAT has a qualification, by the way. I'm not sure if it has changed. I think it's $120,000 a year, or it was 90 something thousand, but something like that. Anything over that, you must register for VAT. Anything below that, I think, is discretionary. And then we ask for your CIT records because we need to know if you are owing taxes, how much you are owing, and why you are owing, and or if inland revenue is owing you, because it could be that way also, because you must pay tax in advance. For CIT, it is advance tax, so usually it should be a recoverable. Then we have the UBT. We need those records to make sure that your UBT is up to date. So if you have not paid your UBT, as the auditor, we have to place it as a payable because it has to be paid. So some persons might just say, oh, we owe in taxes, but I like to get it from the taxman himself, from the IRD itself. I almost say IRS, the US. I spent some time in the US, actually. That's where I am right now. So I tend to sometimes talk about the IRS because I do sometimes US taxes. Sorry about that. So we have the inspect the information. So we look at for auditing. We look at your internal policies. Your internal policies will give us an idea of your control systems. We have to look at your control systems because we have to measure your risk. The audit is not just putting figures. Audit looks at the organization as a whole. So we have to look at your risk. Are you risk averse? What risk exists? How do you manage those risks if they exist? We look at your policies, things like your fixed asset policy. How should you manage your fixed assets? We look at things like your accounting policies to give us an idea of your accounting recording. Your accounting policy, your IT policies. We look at your HR policies. All these policy documents, we have to look at them to measure your risk and what level of risk are you undergoing. Because the audit also has to report whether you are a going concern or not. A going concern means, will you be there 2-3 years after the audit is complete? Because if I said as the auditor that you are a going concern, that means in the 2-3 years you'll still be operating, and the next year you close down. they're going to come back at me. I could be held liable. So person understand the responsibility the auditor has. I could be held liable for giving you a clean bill of health, and next year you're folding up. Something has to be wrong. So that's why we have to look at your risk. Your payroll records, naturally, because we have to see whether you cheat in Social Security or not. It's a fact. We have to make sure you pay your Social Security and you pay it on time. If you don't, we have a duty to report it. And we have to record in the financials Social Security owing for how many employees and how long you're owing that Social Security. We have to record it as a payable. That is why we need the payroll records. But payroll records is usually Social Security on that you're reporting, and also your payroll register, and make sure those two things match. Vendor receipts, naturally, because we do sampling. So the vendor receipts would give us an idea of persons that you have paid. And then we do a sampling of all your invoices to make sure that your invoices are paid and they are paid on time. Your bank statements, they have to be reconciled. We don't reconcile them. You have to reconcile your bank statements, and the auditor will make sure that they are reconciled, and all the outstanding checks, look at how long they are outstanding. If you have checks that persons have not, you gave a check to, let us say, Kylie, and 7, 8 months, the check is still outstanding, we will tell you that this check has to be written back, or give Kylie a fresh check because it's no good anymore. If there may be deposit which has not gone to the bank may be owing you. If it's over 7 years, Kako smoke your pipe. The bank will go, after 7 years, that's it. It is statute bad. So things like that we look at. A person's owing you, you allow them to owe you for more than 7 years without making a concerted effort to get back your money. We ask you to write that back. You're not going to get it back. It is dead and it is gone. So the audit brings up things like that. You could send a question in the chat as I am speaking. I'll be happy if you do that. I know it's a lot to unpack, but it's reality with the audit. So as the auditor, we also compare the records. So we look at the government filings. Like, you have to file with the FSRC. What's the FSRC? That's the Financial Reporting Council for the government. It's not reporting, regulatory. It is a regulation. It's a regulatory body for companies in St. Kitts. Well, each Caribbean island has one. The FSRC. So it's a reporting. It's a regulatory body for companies in St. Kitts, and every year you are supposed to file with them. You file it shows your different your status as an NGO and also as a company. Also, government filings would be, like I said, CIT would be government filings, Social Security would be government, but I just put FSRC as an example. And then we have third-party reports. Third-party reports where we use confirmations to determine that the information that you have in your balance sheet is correct. Let's say your balance sheet would have accounts payable. It shows that you owe Kylie, you owe TDC, you owe Husfords, you owe Dillil Walwing. We will send a letter to them asking them to confirm, that's the third-party reports, to confirm that you actually owe them the funds that you have in your books. Or it's on the other side, people owe you money. And so we send out a confirmation to the persons who owe you money to verify or to confirm or to say that they actually owe you the money, that the funds that is recorded in your books. Or if they don't owe you that, say what they owe you. So we can do that comparative. The auditor also use prior year data. Like I said, 2021, 2020, we asked for the 2 years for looking for consistency in your income, consistency in your expenses. You may be in the tourism industry. We know that's cyclical. You may be in the industry where you buy and sell. So if we see a change, that means there may be a change in your operations. So we look for that consistency in the prior year data. And also we need the balance is coming forward for continuity. Asset valuations and sales, that is another big area because your assets, like I said, your fixed assets must be physically counted every year, and the value of those assets is usually the book value. However, there may be assets that are where you have to use the market value, like shares. If you have shares in a company, that's also an asset. Shares in a company, like let's say treasury bills for government, shares in a US company, and there are a lot of scientists people who are shares in the US company actually. And then these shares are normally valued at the market rate. Then you have the tax filing for the current year and prior years. The same thing, CBT, for Senki CBT, VAT, UBT, we look at those and we ensure that they are paid. If not, we know that it's a payable. You may not have it in your books. So we have to include it. So what we also do, we write to Inland Revenue for any taxes that you may be owing or they owing you, like I said, because sometimes they can owe you. And then we use that to make a determination, what is your tax position? And like I spoke about the Social Security filings earlier, that we also use that, even if your books may not have it, but we have to include Social Security that you may be owing. And a lot of times I have had to do that. Sometimes the client might not be too happy, but we have to protect ourselves. Because if these accounts go to Inland Revenue, be aware that Inland Revenue does audits nowadays. They are doing more audits than before. So if we make an error, they are going to pick it up. And they will compare Social Security filings. They do that. I must telling you, if they do, I know they do it. They do check a Social Security filings to ensure that you have filed properly. And the figures are correct, but probably not correct, but they ensure that your Social Security filings are done properly. So we have to look at the Social Security filings, and if you have not paid for your staff, we know how much staff you have. We have an idea of the salaries. So we will do a calculation of how much you may be owing and place that figure in your financials. So if you do not need an audit, don't ask for one. I always tell that to people. If you don't need an audit, do not ask for one. It's expensive, it's intrusive. Intrusive, I mean more and more, like I said, the auditing standards are changing and more they are becoming intrusive because more and more we have scams. And more we have scams is more the audit people like me have to be looking out for all kind of financial irregularities. Although that is not an objective, but it's an expectation. So how to organize one audit? Ensure all your documents are up to date. Most irking thing, that is something which irks me a lot, is that persons don't want to pay, but they give you stress. And the more stress you give, the more money you should pay. Because if your records are not up to date, it's going to lengthen the audit period. We have to be going through things over unnecessarily wasting time on documents which are inaccurate. So make sure it is up to date, which is your income statement, which Kylie spoke about that, your cash flow and your recent invoices have to be up to date and available. And we review your internal controls, which I spoke about earlier, the segregation of duties. Segregation of duties means that you can't have the same person doing AP, reconciling your bank statements. Think about it. The same person writing your check, when the bank come back and say whatever, that the same person is going back to. You did the segregation of duties so to avoid collusion and to avoid fraud. Also, segregation of duties, make sure that one person doesn't stay in the same spot and they want to go on vacation. That's a big red flag. They know what they're sitting on. If they go on vacation and Mary takes their place, may remind you the irregularities that John is doing. So John don't want to go on vacation. I have come across that several times. When I have been in a CFO in one of the big companies in Dominica before I came here. I've been here for the last 25 years. And that was before 2000. And I was actually doing, I was doing the helping an auditor. And I remember, I'm looking at the vacation because I thought I know I audit to look at the vacation. And I'm like, but the vacation for this person? He said, yeah, she hardly gone. I said, hardly gone vacation? Why? And then he started acting, and he's like, you look suspicious. I said, I haven't said nothing. I'm just telling you, you need to make sure that person goes on vacation and put a competent person back in their place that is not their friend. And it's like, what are you talking about, Sherilla? Put somebody that is not their friend to do their work while they're out. And you might see stuff, certain stuff might come up that you may not be aware of. And sometimes you find the bank deposits did not reach the bank. Bank deposits did not, the physical actual funds, it's on your books as if it's in the bank. And because it's that very same person doing the bank rec, they make the bank rec look nice. So you have not a clue that these funds did not reach the bank. Segregation of duties. Authorization procedures, regular reconciliation, make sure those authorization is clear. Any serious process has to be authorized by two people or somebody executive. Let us say the purchase of a fixed asset. You cannot have anybody purchasing a fixed asset. Authorization procedure. You have to have one person to authorize the invoice, and another person saying yes, buy that fixed asset, and you should have certain levels of purchasing. 0 to 1,000, it could be this person with that level of, not person, but office. To sign expenses over 5,000, it has to be the financial controller. Expenses over 20,000 is the general manager. Anything above that has to be the chairman or the treasurer of the board, something like that. That's authorization procedures. And like we spoke about regular reconciliations earlier, so I won't bother elaborate so much on that. And I spoke about it several times. You have regular reconciliations, not just your bank, but all your social security, your tax, and your VAT and things like that. Your accounts payable should be reconciled too. Your accounts receivable should also be reconciled often. And then we have to conduct a pre-audit review, even before the auditors come, even before the auditors or you appoint an auditor, to make sure your audit goes smooth. You reconcile all your accounts in advance. Like your AP, you reconcile your accounts payable in advance. You reconcile your accounts receivables, things like that, you reconcile them in advance. Because the auditor is going to ask for that reconciliation. You can review your financial statements. You may not have all the things for that, but it's right. If you can do it, that you do that, and you correct any errors that you may come across. Let us say for your accounts payable, if you're reconciling that, you might come across invoices not recorded. You might come across invoices recorded incorrectly. Or you might or an invoice record twice. Because you might say, well, how can that person have not paid? John, I paid. John, this invoice is over 9 months. Why John I paying? Then you go back and you realize John did pay, but John paid one invoice and the clerk recorded twice instead of once. You might also come across overpayment, and that is something I have seen a lot. On a lot, companies losing money because some clerk paid an invoice twice, and big money too, $68,000, $38,000. They paid the invoice twice. The invoice came in, they sent it to whoever to authorize. It stayed on the person's desk. Then the company got upset, sent another one. So now you have two invoices from the same company. The general manager found the invoice, he authorized the first one that could not be found. Now you have a fresh one. Somebody did not take their time to compare them. Two invoices gone through your system. Now you have paid an invoice twice. You are out of money. That's the need to reconcile your accounts and see where you are on a monthly basis. Like I said, you can put your questions in the chat as we are going along to make it easier than leaving everything afterwards. That's audit, and the next one we come to understand you also have compliance. Like you have for an audit, I have to ensure that you comply to the laws which control your particular operation. Different industries have different laws. Let's say I'm doing the audit for Caribbean credit card. There are a number of laws which govern the credit card industry that I have to ensure that they abide by. I may be auditing the credit union. There are also different set of laws. I may be auditing an NGO. An NGO, the Companies Act, and different things that they have to abide by. So the auditor also have to look at that to ensure that the in regulations for a specific industry, that the enterprise goes along with, observe the laws for the specific industry. Like the hotel industry, I do audits for hotels, and they are specific. They have a specific industry laws for hotels that they have to abide by, which may not, let us say, which may not be that of another industry. Also, you have to prepare your team for the audit. Who is going to be the point person in your team? It may be just 3 of you. Sometimes I meet company just 3 people, but loads of money passing through it. Your accounting team might just be 4, or it could be 55. But you have to have a point person to deal with the auditors and other persons within the organization who is going to go through the files and pull the invoices, which should be online, but some persons still have this thing in box. We still have box and all those kind of nonsense. Still, people still have those boxes. Or the shopkeepers still have this little thing. You know, when you used to go in those rum shop and they have a little like an iron thing. It's something like an iron. They push the thing inside of it, the invoice inside of it. When the boss man come with the sugar bag of sugar, and the invoice for the bag of sugar, they just throw this thing in there. They still have that. So you have somebody on your team who's going to look through the box and find the invoices. You also need somebody who is going to deal with the lawyers and things like that. So you assign tasks to the different persons, and you create a schedule of how long it's going to take and who's going to do what within what time frame. That's what we call the planning. But you should to do your audit. Well, we say consider hiring a chartered accountant to guide you through the process. I do that for a number of companies. I mean, if I'm not the auditor, today I had about 3 meetings today. I'm with 3 companies. I'm preparing for the audits. One audit is ongoing, and the other preparing for the audit. That is what I do. I do audits myself, but I do not prepare the companies that I audit for audit. I prepare other companies for other auditors. What I would do is just like I said, I make sure their AP is reconciled. I make sure that their AR is reconciled. I go through the fixed assets, which is the biggest headache, the fixed assets. They purchase, let us say, a company might purchase a whole car and they forget to record it. So you see a car park in the parking lot, driving up and say, hey, I have a new vehicle. And somebody say, they just buy this for the HR manager. And I'm like, but I can't remember seeing this thing in the books. He said, oh my gosh, I forget, you got those things, and then, they include it. So usually the fixed asset, or they may not depreciate it properly. Depreciation does not match. Or wrong depreciation, provision, or provision for bad debts. Things like that we look at. Like I said, anything over 7 years, you provide for it. And even if it's not 7 years yet, but you notice a debt is getting bad because it's 6 months and person has not paid, they can't find them, they skip island, they take a boat and they go St. Martin or something, and they don't return, and things like that. You might have to write that up. And maintain transparency. Yeah, you have to give us the information, because we will find out. Be open and provide clear documentation and address the discrepancies. If you don't, you lengthen your audit, deliberately lengthen your audit unnecessarily. Because if you are not transparent, if you are not open, as an auditor in the business long term, we may not always, if we are not sure, we ask questions, and it's going to lengthen your audit unnecessarily and give the auditor unnecessary work. And trust me, you will be billed. There are some big companies here, you waste their time and you get these extra bills coming through after the audit. After your audit engagement letter has been signed, any additional work is usually additional money. So if you are not transparent, if you are not open and you give the auditor stress, the bill, you pay for it through your billing. All right, let us go to the next one. The benefits for small business. What is the benefit for a small business to do an audit? I gave the requirements earlier on. What is the benefit? Fraud detection. You identify internal fraud or misappropriation early. Like I said earlier on, we look at things like segregation of duties. You realize, but that stuff never go on vacation. I wonder about what fraud she or he may be doing there. And you go in there and you look at that person's desk a little closer. Trust me, you do more what you call substantive testing. You look at their desk closer to see more transactions on that desk than anything else. We look at unusual behavior patterns, documentation missing. So we look at different methods of fraud detection, tax compliance. We make sure that your filings are accurate. We look at your income, your expenses, if in case you're doing CIT, it could be UBT. And we look at that and make sure that you did not pay more tax than you should. We also do tax planning. That is also a question. Are you paying more tax than you should? There are companies which can apply for favorable tax conditions. There are companies who get favorable tax breaks. Are you eligible for that? Is your income overstated? Are there expenses that you can bring on board that will reduce your tax? Because there are a lot of companies there are companies that I have come across preparing them for tax, and they have not recorded all the expenses. And every single penny that you can record, you record it. Trust me, every penny that you can record, which is allowed, that's the other question, which is allowed, because there are certain expenses the taxman don't allow. So not all expenses are allowed, even for VAT. So, and also, like I said, investor confidence with the banks. Most banks will ask you for an audit. Most banks, depending on how much money, the amount of funds that you are seeking, they will ask for an audit. So it gives them the assurance that the information you are presenting is correct. Operational improvement. Naturally, we highlight inefficiencies in your operations. Like I said, your control systems, your risk analysis. When we have to do an in-depth risk analysis, I didn't go deep into it because, but we do an in-depth risk analysis. We do an in-depth operational to look for inefficiencies in your operation, looking at your control systems. We look at your control systems, your control measures. We look at your staffing, and things like that. And then we can see areas of inefficiencies, and we are expected to issue what we call a management letter. So after the audit, we are expected to issue a management letter. And in that management letter, we would highlight if there are any operational efficiencies that we observe, or if there are any factors that may impact you as a going concern. Like I said, going concern, to ensure that your operation will continue in the foreseeable future. We have to comment on that too as auditors in our audit report. So that will also highlight that. And all those things in your management letter, we have to highlight the operational inefficiencies and also how you can improve on them, or recommendations for improvement after the audit is done. And we don't just look at the audit yield. We are expected in, I think, IAS, one of them, 25310, I think. We are expected to look at your accounts receivable and your accounts payable 5 months after the financial year. So let's say that your financial year ends in September. We still have to ask you for your sub-ledger for AR and AP, September, October, November, December, January, February. And for up to February, we have to ask you for to look at your pattern. So if you have somebody in your accounts receivable, and you know what that means, I assume accounts receivable, people owing you money. So if you say in your account receivable, Mary, Jack, Peter, Paul owing me money, owing me funds, and you have the amount that each person owing you, and 5 months down the road, they are still owing you the same amount of money, that's a red flag for the auditor. Or you are still owing that person and there isn't a reason, and you cannot give a reason that is reasonable why you are still owing that person, because there could be a reason for it. You could be in court and there could be a court case pending. And why is a court case pending? Then that would be a cause for what you call a contingent liability, which is a big word, but you know. So all those things has been, and even if it happened after the year end, we have to report it as if it impacts the year that we are reporting. I don't know if that makes sense, but it just shows the amount of work which goes into auditing. So all that is part of the audit process that we have to undertake as an auditor. So we have to do that. So I just gave a tip of the iceberg. There's a lot more, but I gave a tip of the iceberg. For us, a bigger business takes a lot more work. So any questions, any comments? Our friend says emotional outbursts. Anything you don't understand, feel free to put it in the chat.
There's a question in the chat.
Yes.
Somebody was asking about the tourism sector and how often that should be audited.
It wasn't clear. Go again, Abby.
They were asking about the tourism sector and how often they should be audited.
The tourism sector? It wasn't clear. Go ahead again. I'm trying to listen.
So the person was asking about the tourism sector and how often they should be audited.
Oh, the tourism sector. It depends on the size of the firm. It could be your own decision, first of all. Or if it's a company that has like I said, a public responsibility. I don't know how big the firm is. And if the bank asks for it, so it depends. If the bank asks you, and if you look go to the bank for financing, the bank would ask you for an audit. If you are self-financing and you don't see the need for it, then you don't have to have an audit. So if you don't have a fiduciary, a public responsibility, and if the bank do not mandate that you have an audit, it's not necessary that you have an audit. Am I making sense? So it would depend on a number of factors. The tourism sector, I don't think there's any here. So it depends. It will depend. You know, it will depend on the type of organization.
Okay.
Yeah,
I just said thank you, and yeah, you started. Okay, and that you did make sense.
Yeah. Okay. All right. Thanks. What about those in your in house?
Any questions?
Yeah. I want to know what's the how we can handle somebody that is in business when for over 10 years. I'm not sure business person. One is in business for quite a long time. The other one is in business not quite 10 years, but they have no record, they keep no record, they don't know when I say nothing. So my question is, how do you convey, how do you get them to see the importance of keeping records?
Okay, so the person in the chat, she was asking, how do you convince someone that has been in business for about 10 years and they keep zero records? How do you convince them or notify them of the importance of keeping said records? I would say you speak with the money. you let them know, like some of the examples that I gave, how much money you can lose when you don't track these things, when you're not noticing that, okay, maybe I'm spending too much here, or I overpaid this and duplicated this payment, this invoice payment, or you're not realizing, maybe you thought this client paid you and they actually didn't pay you, so you're not receiving that money. So you speak to the money for them and let them realize that the record keeping is actually saving them money and helping them to make money because they get to track these things better. When you just, especially if you're dealing in a lot of cash, it's very hard to track cash, just like that if you're not keeping track of your records and stuff like that. And just like that, anybody could steal from you because if you're a cash heavy company and you're not keeping any receipts or anything, you have any records at all, you have no idea how much cash you started the month with or there with. And anybody could come and take out that $10 here, because maybe you have a file, and if the file comes down slowly, you're not gonna realize that most persons that commit fraud in that way, they're not gonna take 100,000 one time. They're gonna, what they call it, penny something. The term is evading me, but they're gonna take a little bit here, a little bit there, a little bit there, and if you're not keeping those records, then it's gonna completely gone, you know. So speak to them on the money side of it and let them know like you're losing money and just paper and just old trash and that kind of thing. You're losing money and you're not keeping track of your finances.
Yeah, and also you'll be surprised the amount of children are still from their parents. That is when the children steal from their parents. Bad, 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 bad. Why you steal from husband? And the husband's in the business. By the time the husband opened his eyes, she got some bigger account somewhere. And that kind of thing. So all those things could help. And they may not keep every single invoice, they may not keep every single, but if they keep sufficient, let us say they keep at least, if they keep at least something. Sometimes we can use what they keep and do what we call estimates for the others, but they have to track the money. It's tracking the money. The important thing is tracking the money. So if you show somebody how they can make more money and how they may lose money, like Kylie said, that is where this income is money. It comes down to money, to managing their money, making sure they keep track of what they place into the bank, and if what goes into the bank is that what should go to the bank. If I give you stories, it'll make your head spin. I'm telling you, I've been in business long time. If I tell you thing fraud I have come across, it would make your head spin. About 2 months I was telling somebody there was this company I was doing some work for, and I'm like, all the checks went to the bank and no cash. And the guy tells me, Massey got the check. I say, yeah, look at the deposit. Only the checks gone. I can't see you having only checks in your till. And nobody came for $10. Nobody came in for 20. He said, yeah, we do have a cash business. I said, well, some way, all the cash are going. So you better check to see who you giving money to drop in the bank. That kind of thing happens a lot. And like I said, half of it, if it's a family business, half of the time your daughter's stealing from your daughter's stealing from you, and you may not even realize it because you trust them. With a short-term vision. Not looking at the business as a legacy or continuity. They just looking, no, me want to do me nails, and me want to do me here, and me daddy have money in a till, so me gonna help myself. And poor daddy not realizing he need to keep track of the funds to ensure the business continues or he have a retirement. So depending on how young the person is, and they might just say, oh, I'm still 40, I'm still young. The years does drop, the years coming up on you so fast you wouldn't believe. By the time you open that, you're 60. And when you look at your insurance, it's not enough. And whoever steals from you, and you're in problems. Or you want a loan from the bank, suddenly all the cash you think you have is not enough, and you want a loan. To get the loan, you have no records, and the bank will insist on having financial statements.
But if small businesses know when you go for loans, they're requesting that an accountant does at least an income statement for you. So the bank's not taking you just coming in now and saying, I need a loan. They're requesting that an accountant provides at least at minimum your income statement for you.
And then you have inland revenue. You have inland revenue to deal with. Because like I said, nowadays they are doing more audits. And if inland revenue come and you are not able to defend yourself, most times you are judged higher. Your sales or your expenses are judged lower than the act because there may be expenses that they may not be aware of. And you are actually expending that money, but they may not be aware because they may group all businesses in that sector alike. There may be expenses peculiar to you that you are not recording. If inland revenue comes to do an audit, your tax bill usually is higher than it ought to be. But if you are keeping proper records, you should be able to defend it. So that's another aspect to keeping proper records.
Yes, they had another question.
Oh, yeah, I have a question. Do you know any programs in school that teach this money transaction process? I realize that the men is supposed to be leaders, right? And they have a lot of confidence with the money because they have the money in the pocket, whatever to show, right? And allocating it properly or keeping good accounting and stuff like that. Right? So my thought was we have to start somewhere. And if we start from small, the purpose of saving, it don't have to be a lot, but you can have a lot of saving that's 10 cents of that. Give them the mindset of always putting something aside. So I was wondering if we have a program, continuous program, that's something that if we have financial month or week that we don't really sure, but something that is teaching the young ones from small, keeping a good one.
Okay, so the question is if there are basically any programs in the school that teach basically financial literacy and things like that. To my knowledge, I don't know of any programs that we have here.
Yes. The schools, I'm not sure they still have it, but at least 3 years ago, I have been to some of the schools. The schools have what we call the schools savings program. When I was the president of the St. Kitts Credit Union, they had the schools had their savings there, and the children were encouraged to save. And each child, I'm not sure how old, but each child had what we call a savings book. And one of the staff at the credit union used to assist them. I'm not sure if it continues, but I know Dominica Forshey had it and St. Kitts had the same. Bob Dominica and St. Kitts had the same program in the schools. I have been to Sandy Point. I have been to Washi, I think. I have been where they had it going, where the children were encouraged to save. I'm not sure because
the schools have those hands-on program in terms of like telling you, okay, bring me money to save, but in terms of the programs where they sit down and teach you about it, I think what I know is mostly just if you choose accounting as a course in school, in terms of sit-down courses where I guess like a club after school and things like that. I know they do the savings program where they encourage you to save, yes, but in terms of sitting down and I guess explaining these concepts, I don't know of any such program where they deal with that, especially continuously. So it is something to offer and look into. Because she was mentioning that, a lot of men especially are not exactly financially literate in terms of when they are older and being the head of the household and knowing how to manage the money and things
most
like
men
that.
don't. The wife manage it for them.
She was asking about those programs.
Yeah, I met somebody when tell you, my wife, me don't have much money in the bank account. My wife takes care of that. There ought to be because some of these things you see going on if people and then as soon as they lost their jobs, they're in trouble because they did not cater for that. And with a tourism-based economy, it is so important. If a tourism-based economy, it is important, and I supported that there should be something like that. I thought with the Elevate program or something, government would have had it in a different way. There's some Elevate program or something, I can't remember the name that government brought about. Aspire. I was hoping that they would use that as a platform.
Yeah,
that should have been the platform used by government, that the Aspire program ought to have had a component of it that teaches them about money and savings. just giving children shares in a company, however it is, and they don't know what it is. The mother is the one taking care of it, and it doesn't. I don't know. Anyway, let me keep my mouth political. Leave it alone.
Well, that's like a one, two, three, okay, let's see.
I'd like to know what applies to NGOs in terms of annual.
Okay, so, it's sorry, so she was asking what applies to NGOs in terms of the audits and the timelines and what's not. In terms of how the financials would look as well, it would be very similar to what you see here, but the terminology would be a bit different sometimes. So for instance, with non-profit and such, you would see instead of profit and loss, it would be income and expenditure. So the terminologies are a bit different, and most times you would see instead of a profit, you would see surplus and things like that. In terms of the timeline, I guess Ms. Masika could speak more to that, but I think again it depends on everybody. The financial reporting period will always be a year most of the time. So in terms of the timelines, I guess it will be depending on who is requesting the other
FS financial statement.
So FSRC, yes. So the FSRC filing is annual, but you give your financials to them at the end of your financial year. And so whatever your financial year end is, then you prepare your financials after that period and you file it with them.
It has to be audited. It has to be audited. The FSR for NGOs.
Yeah.
Yeah, it must be audited. NGO must be audited.
Yeah, that's what if there's a specific timeline that the government requires, or it depends. It's on the annual reset. It's not really.
So then the government goes based on financial year. So even in a revenue, if your financial year is October to September, then they would expect to see you filing 3 months and 15 days after that. If you file later than that, then it's late fees and penalties. So they go based on what your financial year is, then they have a deadline for 3 months, 15 days after that, you should file your returns.
And for in terms of having auditing from a external auditing, but then earlier we have said certified document.
Okay, so for us, I won't speak for all auditors, but for us, we like to get your documentation even before you when you wrap up the entire year. We like to start getting the information so we could start working on that. Well, if you are a company that has like inventory and stuff, we encourage you to maybe the last month start doing your inventory counts and things like that, so that you're not waiting until your financial year completely ends to be kind of struggling to get the information. That 3 months might seem like a lot, but when we have a lot of information to go through, the time will go like that. So we encourage you to start putting your stuff together before the financial year ends, and you start giving us that information so that we can start compiling, so that by the time your year ends up, we don't have too much to do before the deadline.
3 months and 15 days.
Okay, any more questions? Okay, so let me wrap up and reiterate something. Okay, so to reiterate, Ms. Masika, we have spoken about the importance of transparency and accountability. Accountants could get annoying if you're not transparent with us, because whether you tell us or not, more than likely we don't know. There are a lot of things that maybe you might look at and it wouldn't speak to you, but we could look at some numbers and it would jump out instantly like something wrong here. Something isn't right, you're hiding something, this figure shouldn't be that way, especially if, let's say for instance, in 2021, your travel expenses were 5,000, and then in 2022, we see $30,000 as your total. Right away, we know this way out of your pattern, so you have to explain it. And then when we come digging and we say, okay, you have to provide me with the tickets, information, provide me with all of it. Persons get annoyed because it's like, when you're digging all of this, I don't have this, may save this, but we need to see this to be able to justify it, because just like us, if inland revenue looks at it and sees such a huge discrepancy, yes, well, they're gonna come back like, what was the reason for this? And then we have to put that in our report now. We're gonna say we couldn't verify the reason for this increase, and so For this reason, we are providing a qualified opinion. Clients are not gonna like that. So if you are transparent with us from the onset, then we'll be able to tell inland revenue, okay, we saw this information and we understand why and we support it. If not, we're gonna put in our report, we do not support this part of the information. So you won't like that. So in terms of transparency, please be very transparent with your accountants. It builds trust with the investors, the bank that will spoken about that, your lenders and other stakeholders. Your stakeholders are anybody that has an interest in your business, your customers, your vendors, anybody that you do business with, they all have an interest in hoping that you stay afloat because it's a working relationship. Once again, it ensures compliance with your legal and tax requirements. Once again, as the topic had said, if we find that you owe somebody and you're not reporting it, especially a lot of employers owe social security and are not paying social security, we will report it. So I should say, if you don't want to audit, don't ask for audit. The last thing is it provides management with accurate insights for decision making. So once again, you can't make a decision if you don't have all the information. So you need all the information to be there and to be accurate so that when you're making a decision, your decision is one that's very informed and can give you good future projections and not you thought you had this amount. So when you made a decision now, when you're reaching the period, you realize you can't afford it and things like that. So thank you for listening to us today. Does anyone have any more questions before I give you the short little fun quiz to see what you would have received? Just one question.
So most of what you spoke about is like the different aspect you guys audited businesses and NGOs. But what about if someone wants a personal financial management or assessment of some sort?
Okay, so
For that as well?
yes, we do. It works in the same way. So you think of yourself, sorry. So the question is, what about if somebody wants personal financial advice and the recording of those things? So you basically think of yourself as a business as well, and it's the same operation. You know the income you have, or you look at your expenses and be able to say, okay, you can afford to do this, I can afford to do that, and you could also record your own expenses personally. You don't have to be. Of course, you would look for the free options and not the paid versions, but you could also use the accounting software to record your own personal transactions. Any more questions? Any questions in the chat?
No. Any questions from anyone on Zoom? No. Okay. Well, I
All
do
right
have a
then,
question.
thanks.
I can.
Huh?
Can I ask a question? So
Okay.
for like small organizations, because I mean, I'm sure most of us are small, and also in particular for NGOs, where literally it's like one person doing 10 jobs. For the audit process and, you know, with the segregation of duties and the authorization procedures, what would you recommend for persons that are very small, who obviously like, it's very hard to segregate duties because you're all doing so many roles?
In a case like that, that is where the owner has to pay close attention to his bank statement. Pay close attention to your bank statement and the flow of money, because that is where everything is cash. Flow of money in and out of your bank statement. So if you cannot segregate that duty, you pay close attention to areas in your enterprise where fraud is most likely to happen, and most of us know it's cash. Not always, by the way, not always. I can tell you, not always. Stuff you purchase can also disappear. So, but the greatest area is on your cash flow, your movement of cash through the organization and into your bank account. Pay close attention to that, and pay close attention, and always give your staff a break to take their vacation. Give your staff a break to take their vacation. Don't have a staff who may think they are indispensable to you. And if you can learn every aspect of your business, great. You may not be able to do all, but you are able to understand what's going on. And even if you have to have at least one part-time person who comes in part-time, because I do that a lot, it helps. If you can, even if the person comes twice a week or something like that, it helps. So pay close attention to the flow of money in and out of your enterprise. Don't always allow your staff to take their full 15 days or whatever vacation, and pay close attention to the movement of your staff. You should also have controls in place in terms of the physical movement of the cash. And not just cash, because nowadays a lot of persons pay by credit card and all those things. So you also have to safeguard that. Your credit card is cash, yeah? So the people realize your credit card is cash. So safeguard your credit card and some other form of, like your PayPal, if you have a PayPal account. Even if it's every night before you go to bed, you look at your PayPal account to see if there are any unusual transactions on your PayPal account that you did not authorize. Things like that, you have to look at your PayPal account. We get our credit card thing online now, so you could check that. So things like that, you look at your areas like that and make sure your staff go on vacation. I cannot stretch that enough.
Auditors and funders ask about segregation of duties and authorization procedures. So if you can't segregate duties, what do you tell the auditor and what do you tell the funder?
Well, that's why I said if you're too small and you cannot segregate everything, but if you have two people, you try as much as possible. If at least you have two people, you try to certain functions, like I said, your bank and your AP. You do not have the same person. You write the checks. You can let the person reconcile the bank statement, but you write the checks as the owner. Things like that is segregation. So you don't allow the staff to write the check and still balance your bank account. And if that happens, you monitor the bank account. So you still segregate those. So you have to step in a lot more as the owner. And that is where the accountant comes into play. If you have an external accountant, that is where the external accountant can come into play and do your bank reconciliations for you. So you still segregate these duties. And nowadays, bookkeeping with software, if you keep your records properly, and you have an accountant, let us say, I just charge you, let's say $500 a month, which is either to $500 a month to $50 a month, to put in your invoices. That is also segregation of duties. You might have one person working for you, but then you have an accountant on the side who's not related to your business. Then you can segregate your functions.
We have
another question.
Yeah, so in terms of paying yourself, the owner, what you recommend that you look at some things you see and like spend more than money. So it's to get a bonus. Put that money. Like, what you recommend the value must be that sorry.
Okay, so the question is for self-employed persons who give themselves a salary. What guidelines you would recommend they have in place so that they're not in place to give themselves a little more when they see more money coming in and things like that. So that is why at the start we said to give yourself a set salary. So your salary is your salary, regardless of if you make 50,000 this month, you make 50,000, you make 40,000 next month. Your salary, your set salary is your set salary. So your salary doesn't change based on how much income you see coming in. Because your income doesn't have to mean profit. You might see 40,000 coming, but you realize that you spend 30. So because you see the income coming in doesn't mean that that's the money you have to spend either. So you'll give yourself a set salary and you stick to that. No matter how much you see increases in the month. You could deal with bonuses in December. So you determine what you want. Yeah. You ask for your industry. If you're not sure, then you could look at guidelines for your industry and see what's the regular pay rate for that specific job, and then you base yourself on that.
But you could also look at your needs. You could look at how much money are you actually making and how much you need to live. So if you need, let us say $6,000 a month, Social Security is after 6,500, you're going to pay more money. I don't recommend taking more than that. So let us say 6,500 a month. And what you could also do is to make it easier, let the company pay like your insurance. Let your company pay your life insurance, your health insurance, pay different things on your behalf. But these will be recorded. The important thing in paying yourself is that to avoid people taking the card for the company, go to the ATM, withdraw $200 today, take the same ATM card on Friday they want to go online, and they go back and take it to take a drink with the partners. And then we don't know if it was drink for the partners or if you entertain a client. So to avoid the mixture of monies of the company and yourself, you pay yourself 6,500. Usually that's the maximum I encourage, 6,500 for the time. If you pay Social Security, if you pay the levy, 6,500. If you below 62, because above 6,500 you're going to pay more money for levy, but you can take back that money through other benefits like your insurance, your phone bill. You can tell the company pay a personal phone bill for you. So it will be recorded differently. So we know that phone number is personal. That phone number is the business. So that phone number goes to your benefits. That phone number goes to your expense. That health insurance goes to staff benefits. That other insurance is the company expense. So that goes to the company expense. That other one goes to company expense, but benefits, and it's still an expense that you can claim back. And so if you pay an income tax, you can claim back that expense from the income tax. But if you take it and go, so giving yourself a salary and then you make your personal expenses out of your salary. And then if you see you have extra cash, and you can give yourself a bonus if you want, why not? But if you give yourself a bonus and you pay in Social Security, then you got to pay on Social Security on the bonus if it is not December.
Yeah,
So you
exactly.
could leave the money in the bank
December
account.
bonuses and laying for Social Security. So only Christmas bonus. That's what I said, you stick to the bonus.
Your question for a small.
Yeah, sure. We see it. We see it very often.
So it's expensive and all of that. The money is yes.
And that's what we try to explain to everyone. That's why it was important to have it in this place. And it's something we see a lot. They just see the money and they always say, well, I don't have a salary, I'm not giving myself a salary. So they say, okay, I tell them not tracking what they're taking.
What you can do is, after they like in working for the government, money, they're going to get $1,000. If you want to put on like $200, but $2,200, stick to that. At the end of the year, if you want to give yourself a little bonus on that, then you act as if you is a worker and not like
Yes.
And even that we can help with in terms of allowing you to see if you could afford to give yourself a bonus in December, and we think it's feasible and things like that. All of that is advice that we give as financial professionals.
And the bonus is an expense, eh? The bonus is an expense.
Yeah.
But just make sure you take the bonus in December and not before December. You're going to pay 10%. After 10%, Social Security is 10% as a levy. You're going to pay 10% levy on this thing. So like I said, you can take the money, but by help to pay certain of your personal expenses and keep your salary at 6,500 maximum as a guide. So you pay yourself as a manager will pay themselves if your company can afford it and the cash flow can afford it. Because there are times when if your cash flow cannot afford it, like when Pelican Accounting was young, I gave myself a salary, but there were times when we were not making enough money for me to pay myself. But I had a fixed figure. But it would go, I would say, okay, you cannot pay me. I can't pay myself 6,500 this month. I'll pay myself 5,000. But at the end of the year, it will show that the company owes me more money because my fixed salary, let us say, is 10,000. And so at the end of, if for that month, I do not make 10,000 in dry cash, I still record my salary as 10,000, but I do not take the money. I don't put that money in my bank account as Sherilia because I do not have enough money in Pelican Accounting account, and I'm not going to go into overdraft to pay myself because it's my company.
So that's an example of an accrual. You actually figure, even
Right.
though you haven't been paid, you make sure you record the figure.
So I still record the salary as being paid, But
Yeah.
I don't take all the money because there is not sufficient money in the bank account to pay myself. But I still record it as such. And then the following month now, more funds come in, so I could pay myself. I can actually transfer the cash into my bank account. Let us say the month after, because more money came in. So if the month after, instead of taking if my account is 6,000, in April I could only pay 4,000. I still record 4,000 cash, 2,000 accrual to make it 6. However, in April, May, I make more money in May, more dry cash in May. Instead of taking 6,000 alone, I will take 8,000 in May. So, you do your cash flow, you can the physical money in your cash flow as your cash flow is going along. But it has to be stated the salary is that amount of money on a monthly basis. Do not take your company credit card and go into the ATM and take money for you to go and line with the boys. Okay, that's my response.
Any more questions? Before we
have one more. Okay.
So that was it. That was any more in the chat?
No, that's it.
Okay, so you guys can log on to this Kahoot. Not in my thing.
So it's 212,390.
Okay, so the game pin is 212390. So you go to kahoot.it and then join the game. That I
212,390.
So there should be one question in there that we didn't cover, which is for bonus points.
212,390.
Okay. Which is for bonus points, so we'll see who gets that question correct. Just gonna wait for some more people to get on.
Okay. See that.
It's up to you. Okay, so the question will come up on the screen and you'll see the answer with the shape and you put the shape that is related to the answer.
So you want on the screen on Google?
It would, but you don't see it here. But it will come up on your screen. So you click the answer on your phone screen.
Oh, you want Wi-Fi? Yeah.
But then, anybody in the chat need some more time before I start?
I think they all. 390, 212,390.
Yeah, I don't know. It's not, that's all. We've been.
We're trying, it's not.
It was. Let me see if you can.
Oh, hide. Yeah.
It wasn't.
No.
Everybody here in? Oh, yeah. Good. And the end of the game is to answer as quick as possible. So you get more points for quickness. So once it is clear, just stay on the screen, so it doesn't disconnect you, and then when I fix that, you'll see everything. I just making sure that everybody gets in. So the aim is to get on the leaderboard, first, second, and third, so make sure you're on the podium.
Of course.
Okay, that's it, okay, so everybody in, so I'll put start. You can join where it's already started and answer. It's the shape.
What is the landing?
So each question, like 20 seconds, a 20-second timer, but if everybody answers, then it's gonna go to the next.
Oh, wait, I'm still sick. Yeah, that's that.
But quickness is on fast data, also these people answer quicker than.
Wow. This is my turn.
Okay, next question. Yeah, so quickness and accuracy is what you're looking for.
Going for champagne.
Next question.
Hell.
Okay. I mean, somebody answering quicker than you. I mean, you drop. You feel quick, the little one can change. Somebody you know that time. Okay, next question.
Take this one.
Some people get tired about this one. And the financial reporting doesn't only show your profits. Okay, banana 7. Red.
Yeah, more.
Don't forget those steps that we say, man. Okay, everybody got that for this.
They can ask me if you're a genius. Yes, look at that.
Almost done.
And it was a space.
Yeah, so good.
I was actually going to
Ah?
Yeah, I'm good again. Like, you more shots.
This one is a double point question. And the thing had.
Go there. Go there.
So two people got it, right?
Yeah, some more. I can.
Look at check up with the zero, but that was that tricky, and the zero was spelled with an X.
Okay.
Really, I mean, you can't. Why?
Okay, so last question for the win. Let's see who I'm top with now. So who's gonna play the disco and pleasure? This person got really mentioned this one.
Wow.
All right. So let's see. Who on your podium? Kevin is good. Stefan. And that's you? Thank you guys for participating. I hope you had fun and learned something at least.
Yes. All right, so just, I should say thank you. So thank you everybody for coming. I hope you found it to be informative. Thank you to Kaylin and Shirley for their informative presentations. We appreciate you both very much. This is for you. Small token of appreciation.
Thank you.
And thank you everybody for coming. We appreciate you. Thank you very much. If you have any additional questions later on and you want to ask them, feel free to send an email and we'll get the questions to both of them. But thank you everybody for coming. We know you've been elsewhere. So thank you. Thank you very
And
much.
before you go, I think, Abby, we have a prize for, how do you say it? Taj? Is it Taj?
Right, yeah.
Okay, we have a prize for Taj. Keep in touch with Kylene, and if you have any questions, I think Kylene put had our phone numbers up earlier. Probably could put our phone numbers up earlier. So if you have any further questions, then you could contact Kylene, contact the office. And we have a prize. We have a small prize for the winners.
Wonderful. Thank you all so much for joining. Appreciate it. Thank you. That was